Alright everybody, so let's just take a look at some trades. So what opportunities presented themselves today? There were a couple of opportunities, but very few, only one actually was a low risk trade. So the thing is, whenever you get a setup or signal or whatever, it also has to meet the condition of being low risk, right? It's very important because at the end of the day, the setup can fail, and if you chase, you can lose a lot of money. So it needs to qualify the low risk condition. Anyway, so this was the NASDAQ. Price went down, started ding-donging over here, and then finally you have a big buying opportunity right here. Sold buys. So you have that rally, change of behavior, biggest price volume in 25 up waves. After that, market pulled back. And here's the thing, you have to make sure you keep your stops in the right place. If you kept them below this low, then they got taken. But if you kept them below the extreme low, they didn't get taken. So that's just what happened. When pulled back, and that's the low risk trade opportunity between these yellow lines. And then went up, pulled back one more time, and then gave the markup bar, which initiated markup. You could also say this is markup over here, because this bar is not really, it's a 26% more than average, but this is pretty clear. Any one of these green bars marked up price. This one is also a good one because this is off of a low volume, so lack of supply, and then rally, then reversal. So that's really good. It doesn't really matter. The point is, set up, pull back, and then ding dong, up and down, and price goes higher. So the opportunity was in the NASDAQ, and what gives it away is this wave. It's buying pressure. I mean, 25 up waves. It's bigger than 25 up waves, and has more volume than 25 up waves, making a higher high. So, no brainer. All right, now the next one was crude. Crude also right here. This, at least, this more volume here than 49 up waves, at least 49 up waves. And biggest in 17 up waves. Biggest price distance. The biggest wave in 17 up waves. So once that happens, and you can see this was that little accumulation area from where the rally came from. Right? Now the difference between the first trade here in NQ and the second trade here in the crude is this thing did not pull back. If it doesn't pull back, there's no trade. If it doesn't pull back enough, there's no trade. Because remember, number one thing that you need to protect against are big losses. Big losses create all of the problems. So you cannot have big losses. That's why all trades are require low risk. Even if it's going to work or not work, doesn't matter. It just needs to meet the risk threshold. All right, moving on to gold. Nothing. This was there's no level here, I don't think, but this was the reversal right here. You could see where that the volume is the biggest in 34 up waves, and the price is the biggest in 18 up waves. The price volume coming from low volume test. It's pretty bullish, and it just continued up, but it doesn't. I couldn't get the signal off of it because there's no level here. Just just buying. Maybe it's because it's in this demand zone, right? So basically, price pulled back to the demand zone, and buyers bought it. All right, and moving on to the euro. This was a clear trade opportunity right here, clear trade opportunity, but it did not give the low risk trade entry. So the low risk trade entry would be in this in the yellow lines within this range. Price needs to dip in this range for me to pull the trigger. Why? Because again, number one thing is avoid large losses. If I get in here, then the stop goes all the way here. And that pullback, if this trade doesn't work, is not acceptable in terms of risk, and can cause all the issues about revenge trading and overtrading. So let's go. Now we have I don't know about this, but there's some buying activity here in nat gas coming from low volume. So typically, this is there a level here? Okay, so it's coming off of this demand area, and we'll see if it goes. But this is it's only 1.6 and the biggest in 5 up waves, the most volume in 5 up waves. But it's not at any levels, so we let it go. Anyway, so what's the point though? The point is the only real trade was here in NQ. Why? Because rally and pull back into a low volume area. Into a low risk area. All right. Now I'm going to explain. Where is this? So here's an example of the effort reward accumulation. Start explaining that. First, we'll just take a look at NASDAQ. All right. So NASDAQ is pulling back. So tell me something. What happens on pullbacks that cause reversals? Typically one of two things. One, lack of supply. Two, accumulation. That's about it. All right. So if there's lack of supply, the trend will then continue. Because there's lack of supply, the uptrend will continue to go up. Because the supply isn't strong enough to break a trend. If there's accumulation, it'll just absorb the supply and continue higher for higher objectives. So as this pulls back, what you notice here is that is the price volume activity, which helps you determine accumulation. All right. Now you're not 100% sure, no one is ever, but this is the way you read. All right, so this volume produces this much output. All right, the next one is more volume and produces the same amount of output. Okay, so the prior volume was 2014 contracts. This column has 3,146 contracts. Doesn't really produce more output. And the next one has 4,821. 4,821 and does not produce more output. So someone is buying, and that's why price is having difficulty going down. In the last 3 columns, we see increasing amount of volume, but not an increasing amount of output. Increasing input, lack of output. It's becoming difficult to go down when someone's buying. And after that, you need ease of movement to the other side to help validate this judgment. It's like a confirmation. Do you get the ease of movement? You do. Bang, reversal. That's your ease of movement. Biggest volume in 16 green columns, and more output to the upside. Meaning it's harder to go down because it was accumulation, and easier to go up. We're able to push to the upside, creating the reaccumulation reversal. Boom. And price continues to go up. Now here, this here is pretty climactic, so we might get a reversal here. You know, look at this. This climax, this is the real time. You have a lot of what is it? Effort, a lot of input, not a lot of output. Same output as the last, you know, this bar or column here. Look at the input. It produced that much output. Look at the input here. Right? Here you have 5,060 contracts producing this much output. Here you have 11,979 producing the same amount of output. Do you think there's something wrong? No shit. Of course there's something wrong. This is a climactic action, and they've encountered selling. Now it goes ding-dong back and forth, and here we have an indication of potential selling because price tries to go up and volume increases slightly with no result, no output. Now we're looking at the following red thing and seeing if this has ease of movement and breaks. That means that this block here is distribution, because it's hard to go up, and easy to go down. This would be reversal. This would validate the reversal and that there's sellers in this area. So when you go up, sell, the buying is meeting selling. And they won't, with this increase in volume, they don't let it go up and now pushing it back down. So now we see there's ease of movement, which means that this volume here needs to produce output, meaning this volume increase needs to produce movement down, and so far it is. So it's very likely a reversal. Now I don't know how far it's going to go, and you can do point and figure or wherever, measurements even intraday, but it's better just to look at zones because this intraday behavior typically goes in zones and targets the highs and lows. So as you can see, the effort is quite clear. Where am I? Right here. What did I do? Right here. Here it's very clear this climactic volume producing the same amount of output as a prior column, which has far less volume. And then the other indication is right here, where you have that increase in volume but producing no increase in output. And still you don't really know until there's ease of movement to the other side. And now we have some indication that yes, there is ease of movement, because as the volume is increasing, and it is biggest in 17 down bars, we are getting output. We are getting a reward for this effort. This input, this volume is producing directional movement. So that's the output. All right, and that's happening right now on the NASDAQ. So we'll see if this thing reverses and continues lower. All right, I'm done. Thank you very much. Have a good day. Bye.